The operator of South Africa's 9 airports, that is Airports Company South Africa, has today reported its financial results for the year that ended in March. Acsa says the results reflect steady recovery and significant improvement on performance as compared to the previous year. Earnings before tax and interest amounted to 2 billion rand compared to 342 million rand last year, while revenue was 6 billion rand for the 12-month period, and that was up 55% from 3.9 billion rand reported in the previous financial year. We are now joined by the Group CEO Mpumi Mpofu. Mpumi, thank you very much for your time this afternoon. There is a clear, steady recovery in air travel and the financial performance of Acsa, particularly since the COVID-19 lockdowns, with you expecting to become profitable again next year. It seems there's still a lot more work to be done, because while there is recovery, profitability is not there yet. It is much better because there were losses of 1 billion rand last year. This time it was just 142 million rands.
No, absolutely. We really are quite excited about the results we see. To confirm what you've indicated, our revenue has increased to 6 billion, and that contribution comes from aeronautical revenue that is close to 3 billion, and non-aeronautical revenue, which has also increased significantly to almost 3 billion. Now, that's an important indicator, particularly on aeronautical revenue, because that constitutes a reflection of the growth in tourism. We see quite a lot of pumped up demand coming from international tourism and domestic tourism, and that contributes significantly to that aeronautical revenue growth that we see. We are currently at 76% of our 2019 performance levels, and by definition that actually means we really will see total recovery to 100% of 2019 by 2024-25. That's exciting news for us, because at that point we would really expect to be fully profitable. We do anticipate that the next year will be a good one for us for a number of reasons. The factors that contributed to the 143 million loss in this particular year under review include the issue related to buildings and commercial property, and that fair value determination which contributed towards that loss. The other contributing factor related to credit losses, which basically come from the credit that we provided, credit reprieves that we provided to our operators on the platform. And those two areas are not areas that are going to repeat themselves in the new year. We would see an end to those arrangements, and therefore by definition we should be profitable in the next year. We expect that profit level to be marginal but very positive, and we have developed a growth strategy that aims to take us really and facilitate accelerated growth by diversifying our commercial activities on the airport platform and also growing our footprint in the next few years to come. There is going to be exciting work that comes from the cargo environment as we diversify our revenue streams, and that is also going to contribute to increasing aeronautical revenue even further than it is currently at this particular point. So we really expect the next year, 2023-24, to be a profitable year. It's also going to be supported importantly by tariffs assistance we are expecting from our economic regulator. And let me just indicate that we were provided with a tariff increase of 3.1% in the current year under review, and in the current year 23-24 indicatively we've been allocated 4.4% tariff increase. The permission period will then look at a very extensive program which allows more tariff support to the company, but also allows us to invest more in our capital program for the next 5 years. We currently have a relatively muted CAPEX in this particular period, 3.6 billion in the corporate plan 3-year cycle, but with the permission and that being granted, we're likely to see that increase to beyond 20 billion investment. That's also because, as you would recall, Polani, we capped all of our traffic-related capital programs significantly and ensured that we were able to save costs but also limit our activity so that we spend minimally in the COVID period to bolster our liquidity and ensure sustainability.
Mpumi, let's talk about something that we saw in the past 3 years as well. A number of airlines closing shop. There could be one more that is still not sure of. We saw Mango among others. What sort of impact has that had on the finances of Acsa when you look at the situation post-COVID-19? And I speak about COVID-19 once again because the major reason for these airlines closing their doors was the lockdowns related to COVID-19. What impact have those external events had, particularly when it comes to Acsa?
Well, let me indicate that the closure of airlines, whether they've gone into liquidation or basically they have been taken into business rescue, tend to have an impact, but for a short while. And the reason for this is quite simply what happens, particularly in the domestic market where this has occurred, is as Comair, Mango faced the challenges that they did and stopped operating, what tends to happen is that the other existing airlines are able to, over a period, acquire additional fleets of aircraft, which then enables them very simply to take up the customer base that is unserviced by the airline that has gone under. So we do face a challenge initially, and what customers would see is an increase in prices, in ticket prices initially, but that levels off as soon as that capacity acquired. The major contributing factor to this is simply that it does take time to lease fleet, additional fleet, and bring them into service by each airline that is attempting to do so. What we see on our side is shifts in market share of those airlines, and this has been quite significant given the demise of those airlines. But generally, I think passengers are well serviced. There is now additional capacity, and I know South Africans have been seeing high prices, but we're starting to see those prices come down as enough capacity is available, particularly in the domestic market. Domestic has performed better than international travel, and particularly in respect of the airlines that have serviced it. So we are quite confident that we would be looking to a much improved year in 2023.
Mpumi, briefly before I let you go, something that happened in June, and it's something that was quite alarming. We saw a statement from the International Air Transport Association lambasting the airports company South Africa for the what they call a steep tariff hike amid the inefficiencies that are there. They are saying that a 38% tariff hike is way too much, and it's something that they want resolved. But we saw a statement from Acsa as well responding to that. Where are we with that? Because you spoke about tariff increases a little bit in earlier on. Do you believe that you have overextended yourself in terms of the tariffs, or are they within the international benchmark?
Thank you very much for that question, Kolani. Let me just indicate this is all premised on false news. And I'll say so understanding how the facts of what has happened has been distorted almost deliberately by IATA. And I think they're being really mischievous. So this is what happens with tariffs. We have applied, and what has happened at this particular stage is all that happened was that we submitted an application in November 2022 to the economic regulator. So Acsa is not responsible for issuing its own tariffs. We have an economic regulator that's responsible for that. All that has happened right now is the applications we submitted indicated a proposal for 17.5% increase in the first 2 years of that 5-year tariff application. Now, that would total 35%, and in fact, given other factors, it would be correctly the 38%. But that's an application to the economic regulator. But Acsa did not request a 35% increase once off to the economic regulator. That's where the distortion comes. The reality is that when we do apply for tariff increases over those particular periods, it's over a 5-year. What we did, which is unique in this proposal, because of the backlog of capital expenditure we had created by cutting capital expenditure as a result of COVID, was that we front-loaded, i.e., the application for 7.5 in the first year, 7.5 in the second year, resulted in an application for 0, 0, 0, respectively for year 3, 4, and 5. Now, the objective reality of that is that tariff increase over a 5-year period would be considered as reasonable, given where we are, but also the requirement for us to invest in infrastructure in order to be able to service the airport industry. What really is disingenuous about this articulation that we've been granted 35% is that it's not true. Where are we in the process? The economic regulator has looked at our application. They are processing it. We believe that in the next few months they'll be able to announce what tariff increase they are allowing us. And on that basis, only then we can comment on what we've been granted by the economic regulator. And the impression is created as if this has already been concluded. It hasn't, Kolane. It's actually not true. Thank you.
Problem. No problem at all. No, thank you very much. I wish we had more time. Mpumi Mpofu, the Group CEO at Acsa, there at